previous little ovals are where we've had a dollar strength trade that has developed in the past. And it has correlated with the crypto winters, interestingly. Now, is not always correlated with weakness inside of the indices. And the reason I mention that here is that the dollar has rallied today, and the indices and even the precious metals have gone up, while the currencies and the cryptocurrencies have weakened. And so our dollar correlation chart is going to start to change slightly as we're recording it, as it's rolling into the future here. The positive correlation, you can already see where Bitcoin was positively correlated. It's actually turning negative here over the smaller time frames. And then these negative correlations that you see in the indices, if this trend continues, they're going to turn neutral to positive as we move forward. So that's going to be interesting to watch develop. The DXY pullback that we are inside of here, inversely, has a euro 50% short. If you think about the euro being inside of that absolutely massive resistance level, there's a considerable distance and opportunity to trade the euro coming out of this inverse, gigantic double top type situation. And you can see where the targets are. And that could even lead us to our lows of the year as far as the euro goes. So that is an incredible new trend that's developing here. And what we're watching for as we move forward are pullbacks here from our lows of the week to highs of the week that potentially leads us into a continuation of the trend. Right now, that would be the 97,348. Let's move on here to Bank. Bank has been grinding higher. And while it is inside of a short setup that hasn't broken quite yet, has there been any break in the longs? There hasn't. We are inside of our last week's lows to highs. And if you zoom out a little bit further here, Bank was inside of a halfway back long from lows of the year to highs of the year. If the intraday long setups continue to hold, which they have, this leads to a breakout of the financials, and that puts a tailwind behind the indices. And then that finally gets to our VIX, takes us to our VIX chart. We're in a brand new contract here, the March contract. And let's zoom out here for a moment. The longer term time frames have a very clear downtrend down to these larger targets, 815. Where would the indices be if we broke our lows of the year and traveled to that 815? Much higher, much higher. Now, there are, of course, lows of the year to highs of the year that had previously defended. But our Friday's lows to highs broke. And then in the intraday time frames, we have traditional short setups from our highs of the February contract to our lows on Tuesday. These resistance levels, as we are going into our morning, had a bearish below line in the sand of these 2140s. And if we were holding below that 2140, the indices would rally. And you can see here where we've actually had an incredibly large front run inside of that resistance level. And what's holding us down, or keeping the indices continuing to rally here as we go into our afternoon, is the VIX's traditional short setup here from our morning highs to lows. So far, it has been front run at its 2006 here. If you were rounding down 05s and adding a tick, it would be the 20, which it has touched. And if this stream continues at emoneyaddict.com, the link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.